Most people think trading is about charts, indicators, and strategies. But if you stay in the game long enough, you realize the real battle is not technical, it's psychological. And one of the hardest psychological skills in trading is patience. Patience sounds simple. Just wait, right? But in trading, waiting feels like losing. Waiting feels like missing out. Waiting feels like you're falling behind while everyone else is making money. And that emotional pressure is exactly why patience becomes so hard. The market is designed to test your impatience. Prices move every second. Candles form every minute. News breaks constantly. Social media shows someone turning $10,000 into $1 lack overnight. Your brain sees all this activity and thinks, if I'm not in a trade, I'm doing nothing. But the truth is, sometimes doing nothing is the most profitable move. The problem is, our brains are wired for action, not stillness. We evolved to react quickly to threats and opportunities. In trading, that wiring works against us. Another reason patience is hard is because of dopamine. Every time you enter a trade, your brain gets a small hit of excitement. Win or lose, there's stimulation. Watching the chart move gives you emotional engagement. Waiting for the perfect setup? That's boring. There's no stimulation, no reward, just silence. And most traders don't lose because they don't know strategy. They lose because they can't handle boredom. So they force trades. They jump in early. They trade setups that are almost valid instead of fully confirmed. Impatience also comes from fear of missing out, FOMO. You see a candle exploding upward and think, this is it. You jump in late. You ignore your plan. You forget your entry rules. Why? Because emotionally, missing a trade feels more painful than losing money. Missing feels like regret. Losing feels like, at least I tried. So your brain chooses action over discipline. But professional traders understand something beginners don't. There will always be another trade. The market opens tomorrow, and the day after that. There's also the pressure of expectations. Maybe you told your friends you're trading now. Maybe you want to prove something. Maybe you need money quickly. When you attach urgency to trading, patience disappears. Because patience requires long-term thinking. It requires accepting that consistency beats speed. If you enter the market needing to double your account fast, you won't wait for quality setups. You'll chase volatility. You'll overtrade. And the market punishes urgency. Another hidden reason patience is difficult is the illusion of control. When you're in a trade, you feel involved. You feel active. Waiting feels passive. But trading is not about controlling the market. It's about controlling yourself. The best traders often spend most of their time waiting. They wait for price to reach key levels. They wait for confirmation. They wait for alignment with their strategy. And when everything lines up, they act decisively. Patience is not laziness. It's selective aggression. Impatience also comes from a misunderstanding of probability. A good trading strategy might only give 2 to 3 high-quality setups per week. But beginners expect daily profits. So instead of waiting for high-probability trades, they trade low-quality ones just to feel productive. Imagine a sniper who only shoots when the target is clear. Now imagine a trader shooting at every movement. Who survives longer? The one who waits. Patience is hard because results in trading are delayed. You can follow your rules perfectly and still lose a trade. That confuses the brain. It thinks, why wait if there's no guarantee? But trading is not about guarantees. It's about edge over time. 1 trade means nothing. 20 trades means something. 100 trades reveal the truth. Patience requires trusting the process, not the outcome of a single trade. So how do you build patience? First, reduce screen time. The more you stare at charts, the more you'll feel tempted. Second, define your exact setup in writing. If the market doesn't meet your written conditions, you don't trade. No negotiation. Third, shift your identity. Instead of seeing yourself as someone who trades daily, see yourself as a risk manager. Your job is not to trade. Your job is to protect capital and execute only when odds are in your favor. Understand this. In trading, activity does not equal productivity. More trades do not mean more profit. In fact, for most traders, fewer trades mean better results. Patience feels uncomfortable because it challenges your ego. It challenges your need for action. It forces you to sit with uncertainty. But that discomfort is the price of consistency. At the end of the day, the market rewards those who can wait. It rewards discipline over excitement. It rewards process over impulse. Patience is hard because it goes against human nature. But trading success requires you to act against your instincts. When you learn to be comfortable doing nothing, you gain an edge most traders never develop. So the next time you feel the urge to enter a random trade, pause. Ask yourself, is this my setup or is this my emotion? Because the difference between amateurs and professionals is not intelligence. It's patience. And in trading, patience isn't passive. It's power.